dollar, well, that's going to be an inverse call in here because we think that the dollar is going to move lower. So right now, this pattern in here for the dollar is better. You can see that you had this negative pattern here, and now you have this positive pattern here, and it's moving up. So we think the dollar could move up in here to between 93.85 and 94.35 right there, and then the risks really pick up. And this is where gold and silver could do better right in there. So the intermediate patterns are in their final phase to the downside, and that could accelerate pretty strongly in there. Momentum in here has been choppy right now. It's negative, but the slim ribbon is not wide enough to really make a great call in there, but it just shows you it's having trouble establishing any real momentum in the dollar. And we would expect that it would make a little bit of upside ground, but then likely start moving sharply to the downside. Some of the evidence says downside risk is significant into mid-November, and the upside is likely to be limited. If you're thinking about, well, the gold pattern I just was cautious on and the dollar I'm cautious on, they're inverse. I just think they're going to find ways where the dollar moves down and the gold moves up, and they'll be bouncing back and forth and making these patterns. So with eventually the dollar accelerating to the downside and gold getting a bit of a better lift. That is a look at the dollar.